Welcome to First Intuition. Welcome back to this business tax revision course. In this session, we're going to be having a look at task number 7. We're busy making our way through the First Intuition mock number 1, taking a look at each task one by one, and we've made it to task 7, covering administrative requirements for UK tax law. So I'm going to just take you into our task 7 here. So first thing I wanted to show you is this task has a reasonably high mark allocation, 15 marks here, giving you about 22.5 minutes to complete the task. And it's going to cover a variety of areas all around filing of tax returns, penalties, interest if you don't file on time, what happens with payments, when do they need to be made, what happens if you don't pay on time, etc. So it's the rules around payment and submission of tax returns and the penalties that go with that, along with some other bits and pieces. So the task briefing sets out some revision notes covering those various topics. So you are welcome to take a pause from this lecture and have a read through that now if you think that would be helpful. It does mention reference material, which I think is something we absolutely need to look at here. It tells us the rules for payment, admin and penalties are notoriously difficult to learn. That's because I think they're so fiddly and there's so many of them. But the reference material is ever so helpful in that it has lots of these actually printed in there. And I've got it up on the screen here where you can see that we have the deadline for filing of our tax return, split between unincorporated businesses, so sole traders and partners, and then incorporated companies on the right. We have payment deadlines, which tells us how we're going to pay and when we're going to pay. Details on interest, of course, if we don't pay on time. There's then penalties if we don't file our tax return on time. And there's penalties if we don't pay our taxes on time. There's penalties if we don't let HMRC know that this is our first period of being chargeable to tax. And then we've got information about what happens in the event of HMRC opening an inquiry and how long we have to keep our records for. So quite a lot going on in this section. We've also got a section underneath dealing with penalties if your return is completed incorrectly. So be aware of those sections. We might refer to these as we go along, depends if we're going to need them, but we'll see. So as I said, task 7, admin for UK tax law. I think we'll just go back into our task. And this is an example of a task number 7 here. So Lauren is one of our clients. She's got several restaurants, and over the past few years, we have agreed her tax liabilities. So we've got the tax liability for 22-23, 23-24, and then 24-5. And Lauren is doing her budget. She just wants to be reminded about the tax payments due in 2025. So she's not asking about the payments in relation to the 24-25 tax year. She's saying, I'm looking at my calendar year, 2025, January through to December. I want to know how much I'm going to have to pay in that year. Then we've got 2 dates, the January and the July from that year. We've got to work out what Lauren needs to pay. So I'm going to suggest my method for this. If you have another way of thinking about things, you are more than welcome to use your own approach, but I'll run through my preferred approach for this one. So I've actually just moved the question into a blank workbook. So we'll just go there. So I've got a little bit of space for my workings. Let me just find that for us. There we are. And then I think I can just run through the method here. So as it says, the rules on this section are sort of notoriously tricky. So I sometimes think doing a little bit of extra work can make the question a little bit simpler. So they've given us the tax year 22-23. So what I would be tempted to do is actually just sketch out that tax year. Put this in blue here. Okay. So that's my first tax year. It's a 2022-23 tax year, and it runs from 6th of April through to 5th of April. All tax years go from 6th of April to 5th of April. That's the first year I've been given. And in any year at all, payments on account would be due on the 31st of January within the year, So that would be my first payment on account. Think of it as being like a deposit. So that would be January of 2023. I'd pay my first payment on account. And then following the end of the year, I'd have another payment on account. Payment on account 2. And then in the January that follows the end of the year, I would have the balancing payment. So I've got payments in January 23, July 23 and January of 2024. Now the question is asking about the payments due in 2025. So what I've done there, I suppose, is remind myself of when these payments on account are due, when the balance is due, but none of that is actually needed because I'm not going to be dealing with any dates that are falling into 2024. So I'm then just going to repeat that, but I'm now going to use the next tax year. So from 6th of April 23 to 5th of April 24. Now, if you can see at a glance that we didn't need the 22-23 tax year, no problem. Don't bother sketching it. I sometimes think it's just easier to write it down and just be sure that you've got everything straight in your mind for the couple of seconds that it takes, rather than try to backtrack and work out which year you're supposed to start with. So in every year, I have payments in January within the year. That's the payment on account. So payment on account 1. Then after the end of the year, I've got payment on account 2. And then in January, following the end of the year, so 2025 now, I've got the balance. And isn't that interesting? Because I've now got a January 25 date, and that is actually what the question asked about. So I'm glad that I drew that timeline. I'm going to draw one more. So April 24 to April 25. And then I'm going to repeat exactly what I did, but everything moves on a year. So January of 25 now, got a payment on account. July of 25, I've got a second payment on account. And then January of 2026, I'd have the balance. I'm not asked about 2026, so I don't actually need that bit. As it turns out, I don't need any of those bits, or even those. The figures that the question is specifically asking about is these. Anything that falls into the 2025 calendar year. I sometimes just think it's a bit easier just to sketch out everything to make sure that I get the bits that I want than try to stumble through and work out quite where to start. So that was my approach there. I'm just going to undo all of that because it looks very messy, just to prove a point there. So where next then? Well, I know that I am working on this 23-24 tax year because the payment on account, whilst it falls in 2024, the balancing payment falls in 2025. So I definitely need to work on this year. So let's have a think then. The payments on account in the 23-24 tax year, this year here. The payments on account for this year, they're like deposits because we don't actually know the tax that will be due for this year until the year has actually ended and I've done all my tax computations. But HMRC don't want to wait for their money. So they will ask us to make these deposits or payments on account, if you like. And the payments on account are going to be based on the previous year's tax bill. So my payments on account in this 23-24 tax year will be based on 50% of last year's liability. So last year I owed £24,500. So pay it in 2 instalments. That would be £12,250 in each. So my payments on account here will be £12,250. I've got all the dates written down, so I don't need to worry about that anymore. Another £12,250 there. And then when I get to the end of the year, I'm able to say, oh, okay, I do actually know the total tax that's due for the year. And for the 23-24 tax year, the total tax outstanding is £29,200. I made 2 payments on account. And you can actually just include one total in there if you prefer. So I paid a total of 24,500. I just paid it over 2 payments. So I've got 4,700 due at the end of the period to catch up and make sure that I have settled the entire year's liability. So in January 2025, I'm making a balancing payment of £4,700. And I've highlighted everything that I need for this question so I can keep going, because I then move on and repeat the process for the next tax year. So my next tax year is 24-25, and in my 24-25 tax year, I would make payments on account based on 50% of last year's liability. So last year's liability was now 29,200. So that would give me payments on account of £14,600 in each instalment. So 14,600 for that one, 14,600 for that one. So when I get to the very end of the year and I work out my actual tax bill for this 2024-25 tax year, the actual amount owing is 32,700. So the total outstanding is 32,700. I would then deduct the payments on account. I made 2 of them. And that will tell me how much needs to be paid as a balancing payment in January 26. Now, incidentally, that's not actually needed in this task. I just think sometimes it's good to have an opportunity just to review this. It is an area that people historically don't like so much. So getting to just work through a little bit more than is needed can be helpful. I think it's clear from my yellow highlighting which bits I actually need in order to answer this question. So I can now go ahead and say in January of 2025, there's actually 2 things going on, because I'm going to pay the 4,700 balancing payment, and I'm going to pay my first payment on account for the following year. And then in July, I'm going to pay the second payment on account. So I can now answer the question. By saying 19,300 and 14,600. Where's my question gone? There. So 19,300 and 14,600. And that's all it wanted. So it was only the yellow highlighted bit. So as I said, you didn't need to do all the bit before and the little bit after. If you want to dive straight in, then you are welcome to do that. I just tend to start with the earliest year that I've been given, because I think it only takes a couple of minutes and it just allows me just to focus my mind and to really think about those payments on account and when they happen, when does the balance happen in relation to the tax year. And it just helps get my mind warmed up, I suppose, before I get to the years I'm actually being tested on. But up to you, it's only 2 marks, so you may not want to do more than is really needed. Okay, good. Next one, interesting little task here, dealing with company tax. So Per Perea has made a set of accounts for 18 months to June 2025. The first thing that pops into my mind there is, oh my goodness, it's a long period. So I have got 2 chargeable accounting periods. I've got a 12-month period. We always do the 12 months first, and then the remainder. So another 6 months to take me to June. So a 12-month to December and then 6 months to June. And it actually tells me that in the question here. They're my chargeable accounting periods. I've got to complete the table to show the latest date for the payment of tax and the filing of the tax return. Should we do the filing of the tax return first? And for this, I would definitely rely on the reference material. So I'm just going to open that up, because it talks about filing deadlines right here at the top, which is why I'm doing that one first. I'm looking at companies. And it says the filing deadline is that our return must be filed on the later of 12 months after the end of the accounting period, or 3 months after the notice to deliver the tax return has been issued. Notice to deliver is only generally relevant if it's the first year that our company has had to pay any tax, and they've informed HMRC, hey, look, we're a company, we've just set up, we're going to need to file a tax return, can you sort that out for us? No mention of anything like that going on here. Appears to be a continuing business. So we're looking at 12 months after the end of the accounting period. So it doesn't specify a chargeable accounting period, it just says the accounts period. A chargeable accounting period is just for tax purposes. The accounts are quite happy with their 18-month period. We only have to split into the 12 months and then the rest for tax. Otherwise, we really are quite happy with our accounts period, which runs from January through to June. So, if I'm looking at 12 months after the end of my accounting period, that would take me until June of 2026. So a little bit of an oddity here, because both returns are based on the end of the accounting period. And if the accounting period ends in June 2025, we've got until June 2026 to submit those corporation tax returns. Now, we do have to produce two of them. We have to produce a CT600 or corporation tax return for the first 12 months, then I have to do another one for those other 6 months. But they're both filed on the same date, and they're filed 12 months after my accounting period end date. So my chosen period end. Oh, sorry, I've put 25, that should be 26. Both filed on the same date. So get those done first. Then we work out the date that we have to pay the tax. So let's have a look at what the reference material has to tell me about payments of tax. So here's the payment deadlines. We're dealing with companies, so I'm on the right. And it says if we're a small company with profits of less than 1.5 million, the tax needs to be paid 9 months and 1 day after the end of the accounting period. What it doesn't specify, and I think it would be very helpful if it did, is that this means 9 months and 1 day after the end of the chargeable accounting period, as opposed to just the accounting period. So I think that would be a lot clearer if it said chargeable accounting period. So am I dealing with a small company? That's the next thing to check. Yep, profits are definitely in that small company threshold. So my first chargeable accounting period is up to December 2024. So I add 9 months and 1 day. 9 months takes me to the end of September, plus an extra day takes me into the 1st of October. Then I've got 6 months up to June. 9 months is going to take me to the end of March, plus another day will take me to the 1st of April of 2025. Oh, sorry, got the years wrong. Can't seem to get far enough ahead of time now. So December 24, 9 months and 1 day takes me into 2025. And this one's ending in 25, so it takes me into 2026. I do apologise. There we go. Often I draw timelines for these things, but it was just getting a bit full up there, so I decided not to use it. And you can see how easy it is just to slip into another year if I'm not actually using my timeline. So if I had been using the timeline, I'd have said, okay, here I am, end of 2024, 9 months after that is going to take me to September of 2025, and etc. I'd perhaps have less chance of getting it wrong. But there we go. 9 months and 1 day, the tax needs to be paid. So maybe you notice something very strange here. The strange thing being in both cases, the tax has to be paid before the tax return needs to be filed. But the tax return is the document that we produce to work out how much tax needs to be paid. So it's all a little bit backwards, isn't it? we are required to pay the tax before we submit the actual tax return, but we have to complete the tax return really, or at least do a tax computation to know how much tax to pay. So maybe you can actually even remember that by its oddity. This one particularly talks about using a specified format for our dates. In the exam, this question is likely just to be like a little calendar with a drop-down window, so you're not going to have to worry about that. So, payment dates, remember, are linked to it being a small company or not a large company. So we're looking at the small company deadlines there. So, little note to remind you of that. Okay, so that's part B ticked off. Let's have a look at part C and D regarding late filing and then late payments as well, by the look of it. So Samantha has not yet filed her tax return for 24-25. Her income tax liability is $15,400. She's correctly paid the payments on account, but she hasn't paid the balance in payment. Show the penalties she'd incur if she filed a tax return on the 3 alternative dates shown here. Okay, I'm thinking I'm going to put that in my separate working sheet again. I've got a little more room to work. So here's a question then. So let's just have a look at it again. We're dealing here with the filing of the tax return. So the first thing I might be interested to know is when it should have been filed, because then I can work out if it's definitely late. So it's the 24-25 tax year, and the tax return is due on the 31st of January following the end of the year. So our year is going to run from 6th of April 24 to 5th of April 25. So the tax return would be due on the 31st of January of 2026. So that's the first thing I'm going to note. The next thing I'm going to do is have a look in the reference material to see what these penalties are going to be, because I can see actually she didn't file it on time, that as they said, it's been filed either February, June or December, so it's late. So let's see what the penalties are for these late returns, and I'm just going to jot them onto my timeline. So penalties for late filing. £100 immediate payment, immediate penalty. So if we're late by just a minute or two, £100, no excuses. So that's that one. After 3 months, we move into a penalty which is £10 per day, up to a maximum of £900, because it's a maximum of 90 days. After 6 months, we move to the higher of 5% of the tax due, or £300, whichever is greater. And then after 12 months, same thing again, further £300 or 5% of the tax due if it's not deliberate, further £300 or 70% of the tax due if it is deliberate and not concealed, and so on. So I'm just going to say for 12 months, it depends. Then I'd refer back to that reference material. I'm not going to try to get all of that on the line. It's going to be way too complicating. So it was due in January. So what I'm now going to do is I'm going to say here that that's a trigger point. So if it's not filed on the 31st of January, there is a £100 automatic penalty, can't be avoided. 3 months after that would give her till, where are we now, January, February, March, April. So we've got until 30th of April 26. If it's filed on the 30th of April, I'll only pick up that £100 penalty. If it's not filed on the 30th of April, we'll move into the 3-month late category, which will be where we will start to accumulate penalties of £10 per day up to a maximum of £900. If it's 6 months late, so from January, 6 months would take me to July. So if it's not filed by the 31st of July, 1st of August is going to be my next trigger point, where I'm going to move into 5% of the tax, or £300 if that's greater. And then we've got the 12-month one, and I'm just going to say it depends. And I'll refer back to the reference material, and 12 months would be if it wasn't filed by January of 2027. Okay, so I get all of that on the timeline. And all I've done is use the reference material to put some dates on a timeline, literally copying. So I can now go to the question and see where this question fits with the reference material. So 1st of February of 2026, obviously would be here. So I can see the only penalty I've triggered is a £100 immediate one-off you late fixed penalty. So I'm going to put £100 in there, no daily penalties and no 5% of tax due, just £100. Then that's that one done. If she doesn't make that one, and maybe she makes it to 30th of June 2026, which will then put her into here, because these penalties are cumulative, they are like little triggers. So here, she didn't file by 31st of January, she automatically receives a £100 penalty. She then also doesn't file by 30th of April. So from the 1st of May, she starts incurring penalties of £10 per day. So all through May, which is 31 days, she's incurring those penalties. She only actually files on the 30th of June, and we do include the day of filing. So that's another 30 days in June. So we're looking at 61 days. And it's £10 per day. So £610 in there. But because she does file between 3 and 6 months, then we don't trigger the next penalty, which is 5% of the tax due. So there's no further penalty there. The third option is that she only files in December of 2026. That takes me past July and pops me into here somewhere. December of 26. So the purpose of the timeline is to help me see where I am. Which penalties have I triggered? So I've triggered the £100 because I didn't pay on the 31st of January. I've then triggered the next one, which is £10 per day, maximum of 900. So I trigger that one, and then I actually keep that one going all the way through until the next penalty. So I'm incurring £10 per day from 30th of April to 31st of July, up to a maximum of 900. And because it was only filed in December over here, then I've got the full 900 to pay. So I'm going to put £900 in there as my daily penalty. And then my tax geared penalty, which is going to now be triggered because it wasn't filed on the 31st of July. 1st of August, it's still outstanding. So I've got the next one has been triggered, 5% of the tax due, or £300 if that is greater. Let me put another little working in there. So the tax that's due, let's have a look. 15,400 is due, but she actually has paid on account, 2 payments of 6,000 each. So the tax outstanding is 3,400. 5% of 3,400 is going to be what? Let's say 170. Yeah, so 1,700. There we go. So 1,700 is going to be the... Oh, no, that's not right, is it? What am I doing? 170, of course it is. 170. So £170, but the requirement says if you do not file on time, when this penalty kicks in, it's 5% of the tax due or £300 if that's greater. So it's like a minimum of £300. So in this case, we'll have to pay the full 300. So there we go. That's how we deal with that part of the question. So that is part C. So quite a lot of work there, quite a lot to think about. I do think, though, the more you practice these, and if you have a method, such as sketching out the timeline, annotating it from the reference material, they can actually be really nice questions. Okay. And then the last bit. Part D now, don't I? Not part C. Okay, so let's just pop in part D then. So part D is to show the penalties that would be incurred if she pays her outstanding tax liability on these three alternative dates. So we already know what the outstanding tax liability is. We worked that out in part C. So there's £3,400 outstanding. And the balance in payment, because that's what it is, because she's paid the payments on account already. We've got to maybe think about when it would actually be due, and then we can think about how late she actually is. Let's just go back to the question. She's dealing with her tax return for 24-25, so her balance in payment would be due on the 31st of January of 2026. And if you find the timeline is helpful, then you've got 6th of April 24 through to 5th of April 25, and then you can jot on the various payments on account, one in the year, one after the end of the year, and then one in the following January. So January of 2026 is when the payment is actually due. So let's see when it was made. So that should say expected payment date rather than filing date. I'm going to update that. So the expected payment date is February, and then June, and then December. And you know, before I even fill that in, I'm just going to have a look again at what the rules say in terms of late payment, and then I can copy them in. So if it is 30 days late, 5% of the tax outstanding. And if it is 6 months late, a further 5% of the tax that's outstanding. So that's nice and simple. We'll go back to our timeline. I'm just going to write 30 days and 6 months. So 30 days is going to be a bit of a messy one because it's February, but we've got January 26, so 28 days in February, 29, 30, so it's going to take me to the 2nd of March. And this one is 6 months, which will take me to July. So when did these payments happen? First one, 1st of February 26. So nothing. It's actually in that little grace period, if you like. You've got a 30-day grace period where there is no penalty for paying late. So as long as you get your payment in within 30 days of when it's due, they won't charge anything. So I can give that one a 0. But the next one is in June. If she only pays in June, she then actually falls into this period here where there is now penalties, 5% of the tax that's due. So 5% of the £3,400, £170. The next one is then December 26. That actually falls beyond the 6-month period. So we go over here to December 2026. So we've now got 5% from the first trigger and another 5% from the second trigger. So if we know 5% of 3,400 is 170, we've now got 170 plus another 170. So we've got £340 in penalties altogether for a December late payment. So what I'm trying to demonstrate with my answers to this is that the reference material is really helpful. You just need to find a way of presenting it on your workings paper. I always use a timeline. Present the information from the reference material and then see where the question fits with that. I think it makes these parts much, much nicer. So this is quite a long task because it's got quite a lot of different sections, from late payment penalty to late filing penalty we did to the dates of submission for a tax return. So absolutely all sorts in this task, but the reference material is really there to help. So make sure you use it to the best of your ability.